Ô, louco. Que isso, cara?
Yes, NVIDIA has been running hot. Yes, it's been on a heater. And yes, it's in the overbought zone. But the fact is, it can stay there. The market doesn't care. When the market opened up this morning, it was an absolute feeding frenzy because people were underweight NVIDIA at a critical moment when the AI narrative is still proving to be a market changer. You know, people have been giving credit to the Fed about him delivering a soft landing through his rapid rate increases, but I don't believe that that's true. I think that it was AI. I think it was innovative companies like NVIDIA that has given the soft landing into 2023 and 2024 for a market that seemed to be dead set on recession. The fact is, we're continuing to climb higher. Now, the question is this going to end? Well, of course, we're going to have a swing low at some point. And the fact is that NVIDIA is still pushing higher. They did the heavy lifting. They beat market expectations. And the fact is that most people were feeling today that they did not own enough NVIDIA. I'm going to take you into the charts and I'm going to show you what I see so that you can have a realistic expectation of what it means to buy today. Where are you buying in relationship to resistance and support? We're going to go over it. I made some predictions over the last couple days going into earnings. One of them was that we were going to pull back to support at $660. We did that. We came all the way down to $662 right before the close going into yesterday. In the aftermarket trading, we initially fell beneath 660 and then we went off to the races. We got buy signals on NVIDIA and we shot all the way back up and we came within $2 of my resistance level today. I'm going to go over where I think we can go from here, and I'm going to cover a couple other important stocks for you guys today. This is the Stocks with Josh show. As always, thank you for hitting the like, say hi, throw a heart in the comment, and hit that subscribe to stay on top of these fast-moving stocks. All right, let's go into the charts on NVIDIA. All right, as you guys can see, I've got some resistance and support up on the chart. I've also got some buy and sell signals. Now we got another buy signal, potentially signaling another big move up. A lot of people are expecting between 800 and 1,000. But let's just talk a little bit about what that would look like. Okay, so we see that in the past, every single time we've come to touch the very edge of this red band, it has produced a selling moment. We had a massive swing down to 660 like I had predicted, and a massive push back up to 785. Now we haven't hit 785. We got to 782 and we pulled back a little bit. But the main point that I want you guys to understand, yes, we'll have a little bit of retracement and we're going to begin to continue to move up. And when we get to the place where we touch the top of this line, those are potential swing trade moments. Those are areas, and I'm going to tell you guys how I'm going to trade it. It's the same way that I traded it last night. I'm going long on the shares, and when we get to a place where it could potentially capitulate or go down, I can pretty much cover my position with a handful of puts. And so that's how I'm going to continue to play this. I had entered some puts last night in preparation of earnings because nobody knows what's going to happen. I closed those this morning, and if we get up to this range of 8 to 10, which I'm saying that would be the top of the area where we most likely would see strong resistance, I'm going to take some more puts to protect my long shares. But the fact is, I'm in NVIDIA for the long haul, and I'm hoping to ride it up all the way to $1,000 and a stock split like I've been telling you in my recent videos. Now, if we get to places where it gets too heated, there's various things you can do. If you want to lock in your profits, you can lock in your profits. If you want to hedge your position with a put like I'm doing, you could do it. It all depends on your risk scenario and what your goal is. How long do you intend to hold NVIDIA? Right now, I have regretted, like a lot of people, not owning more NVIDIA. I've felt that frenzy feeling in the morning when people were gobbling up shares. I wanted to gobble up some more. So I'm continuing to invest on dips. I'm hedging on areas of high resistance, and the areas of high resistance that I see going forward are between $800 and $810. That's where I think people would begin to take some precautions. Guys, let me know in the comments section how you did on NVIDIA. And I want to make one more comment about NVIDIA. Someone threw a comment in saying, Josh, you were bearish yesterday on NVIDIA. Hedging a position and holding a position is not bearish. Nobody knows what's going to happen with earnings, but here's the main thing. I'm going long on NVIDIA. I'm going to protect myself and my investment and my capital to a major loss. We just saw an incredible price swing. We went from $660 all the way up to $785. That's a huge price move. And if they hadn't had great earnings and they had missed in some way, then we would have gone even further down from $660, erasing a ton of profit. I've noticed this about YouTube, that sometimes people hear what they want to hear based on their own risk position. Guys, if you're swing trading this, the truth is there's still room up, but I will warn you guys, we are up in the red normally take profit cloud, but for this particular company at this particular moment, spearheading AI, the fact is nobody wants to let go of their NVIDIA shares. All right, let's get into a couple other stocks. The next one I want to cover is Sound, S-O-U-N, SoundHound. This one has moved up in sympathy with NVIDIA, but really what took it higher was the fact that we found out that NVIDIA was an investor in SoundHound. And that's huge because it could mean that there could be an acquisition ahead. At bare minimum, they view Sound as a sound investment. And so, but here's what I want you guys to be aware of there. The potential to the upside, which I have called in the past at being $5 to $7, right? Or even higher. But I want to give you guys this analogy today, and I gave it to the group in the Discord, that the fact is, if you're in the basement and you're trying to get to the next level, it's not just one step. Okay, the stairs do not consist of a single step. There's multiple legs up, right? And so that's what I want you guys to take into consideration with Sound. I do believe that we can get to a $5 and $7 target. And if you're going to go long, then you have to be willing to accept some pretty significant downswings on the stock. Because here's what I want you to see. I'm going to take you into the charts. Support is down at 250, all right, which is pretty far down from where the price currently is at. It's about a 40% drop. And resistance that we're up against, that we have no reason to believe that we're necessarily going to break through, is only about 10 to 15% above us. So the risk to reward because of the recent big move up is in imbalance, which means, again, based on your strategy, you may want to protect yourself. You don't want to be back at $2.50. If it were to flush beneath $3.72, you would like to potentially buy back in at $2.50, which is actually what I'm doing, because Sound has not transitioned from a swing trade to a long-term investment just yet. There's plenty of reasons why you might hold it as a long-term investment, but it does have some pretty wild price action, and so there's reasons to just treat it like a swing trade. Let me know in the comments section if you guys are using a stop loss, if you're going long, or if you're viewing it as a swing trade. I know that folks have made a ton of money on this Sound prediction that I made some months back, so let me know how it's working out for you guys. All right, I'm going to give you some thoughts on some other important stocks. Before I do, let me identify an opportunity in a zero cost to trade platform called Moomoo. But here's the main thing. They've got an incredible offer, an extremely competitive offer. They're going to give away 8.1% interest rate if you just leave cash sitting in your account. I've got a number of friends that leave high amounts of money. They don't do any trading. They're just out there fishing for the best interest rate. Well, Moomoo's got the very best interest rate right now. And in addition to that, they're giving away up to 15 free stock for putting some money in there. So you can get those free stock. You don't have to do any trading, and you can sit and earn 8.1%. I want you to click on the link to check out the offer that's available for you, because it's available in the US, Australia, and Canada, and the offer is different for each place. Okay. Here's the next one we need to cover. I need to cover a big loser of mine, one that's been a massive disappointment, and that's Rivian. I took a chance on Rivian because it had been experiencing an upswing, but even more specifically, I got caught up in the fundamentals. You guys know I'm a technical trader, but I was reading a ton of articles about Rivian. I saw the trucks, I saw the community surrounding the vehicles, and to be honest with you, Rivian has got a great product, and I'm one of the first to say, trust the chart. Price is the truth. And yet I saw that Rivian and the community that they were creating, that there could possibly, this could be an underdog. I took a chance at $19. And I didn't really buy much. I just took a nibble. Then when it came down and consolidated at $15 before earning, I bought a nice little chunk. Not too big, but still a decent sized chunk, enough for me to lose a couple $1,000s. And then they came out with terrible earnings, and the price just flushed down. So this has been right now a complete loser for me. I spent time examining the charts. I gave a breakdown of exactly what I saw going on in the charts. I posted that in the Discord, and I'm just going to give you guys the overview here. You want more detail, you got to get it in the Discord. That's just simply where I have the opportunity to post that many charts and those thoughts. But the fact is that the charts for Rivian have no bullish technicals. And so if you're trading momentum and you're trading the trend, it's not there. The trend is going down. And so this would be an opportunity to have bought puts. I should have hedged my Rivian position, but I didn't. That was a mistake. And the number one thing that I did wrong out of my 4 disciplines that I regularly talk to you guys about is I didn't trade the trend. I went against the trend. Now, the good thing that I did is that I did have a stop loss on, and I did control my position size. And so I don't consider this, a huge mistake, but the fact is it wasn't a win, and the charts are pointing down still. There's no sign that this is reversing. Not every chart is going to be interpreted correctly. Not every trade is going to be entered and exited correctly. As you guys can see, this was not a winning trade for me. My current up target for Rivian right now is $15. That's what I see. Okay, now on the alternative, I've made a nice chunk of money on Tesla, like I said, Tesla, more time on the charts equals more opportunity for me, and Tesla continues to be an ATM. I had predicted that we would pull back to $190 and that would operate as a pretty decent support for a period of time. Now, we still have to watch that level, because if we close beneath 190 on the daily chart, to me, that tells me that the stock is coming back to 180. I don't think we're going to play around beneath 190 and close if we're not going to 180 and lower potentially. Right now, we're in sort of a middle zone, but the good news is that we are still honoring some upward trends. I have a bias to the upside. On Tesla, we're above the 8 EMA, and our target is the 100 EMA, which would put us around that 216 to 217 mark that I gave you guys, but I don't want you to get it mixed up. EVs are not doing that great right now. We're still in bear territory. We're trying to muster up the bulls to make a move, to make a charge out of bear territory. And someone had asked me about the fundamentals and what was going on and the interest rates. The fact is that we were doing well until the market realized that this economy was so strong, the Fed wasn't going to cut. When the Fed does eventually cut, that will be good for Tesla. It actually will be good for Rivian and some of the other EV companies. But at the moment, rate cutting has been kicked down the road by the Fed. And so as a result, largely these are moving down or sideways. I think the Tesla is holding up pretty well, and we do get further closer to the summer. Big tech might begin to cool off, and Tesla could begin to go on a run, because the fact is that their sales are tied to the interest rate. So that's kind of what I see happening with Tesla. All right, I'm going to wrap it up there, guys, today. Thank you for joining me. Please hit that like. It sends the video out to more viewers and helps the page grow. Hit that subscribe to get the next technical update. These markets are going to remain strong, and it's going to be the same market leaders that push it higher, and we don't want to be taking any bearish positions against it. It's one thing to hedge your position. It's entirely another to try to profit from the market turning around when the market has not signaled that it's going to do that yet. Matter of fact, look at Apple has come back to a critical level of support, and I had referenced how it was similar to the Nvidia chart back in the day, giving a potential bearish head and shoulders pattern only for it to turn around and break up, never confirm that pattern, and go much higher. And Apple could begin to tear it up and move back to its all-time high. So the market hasn't told us that the run is over, and so we've got to continue to trade with the trend on performing stocks. That's my best thought for you guys today. Thank you for joining me. Peace and blessings. We'll talk to you again soon.